it's been really rewarding to see people use what we created and say, gosh, I also had an Excel spreadsheet, but yours is so much more powerful. And why would I ever use my Excel spreadsheet? And we're also showing people that they should be thinking of additional metrics, and they should be thinking further down the road, and they should be doing our 30-year forward-looking analysis. And it's making that attainable for people who definitely can understand what the numbers are telling them. And then with the efficiency side, where you just type in an address and usually it knows all the answers. It might pop up and say, hey, we don't know everything about this house. Tell me something about it. But it'll do the analysis for you. Welcome to the Real Estate Crash Course. This is the first episode of a new podcast that we're launching, which is brought to you by Rescover. I'm Morgan Cole, and I have a co-host today. Kristen Lopez is joining me, and we're going to take this opportunity to talk about why we're launching this podcast, and also a little bit about Rescover, who is bringing it to you. And for this purpose, actually, Kristen is going to kind of take the lead today.
Yes, I am.
And she's going to mostly just interview me. So, Kristen, I'm going to hand it off.
Thank you, Morgan. Yes, I am absolutely excited to dig into who you are and your background and really how you came about creating Rescover, because there is a lot of work and thought that was put into this software. And you really took a need that you had to be able to analyze investment properties, and you found a solution for it because you knew there just had to be a better way.
Yeah, that really is. That really is it. I wanted to take, and we'll go over the series of events, but essentially, people had figured out that I knew a lot about the analysis of investment properties. And they were coming to me saying, hey, help me figure out if this is a good one or if that's a good one. And I used, I'm a CCIM. It's a certified commercial investment member. I learned a ton about the right way to analyze properties and what to include. And that generally is applied toward commercial properties and significant investments. Not that an investment house isn't, but people weren't ordinarily going out of their way to do a detailed 30-year analysis. And I said, well, hey, if we can do it on an office building, let's do it on a house. And it helped us figure out this one would be a better investment than that one. And then I started to say, hey, I have my spreadsheet, I'm using the MLS, I'm figuring out this other stuff, but there has to be a more efficient way. And so really, I'll walk you through it, but essentially I was able to automate the process that I had crafted manually and hire a developer and make it an automated process.
And that's one thing that I've always very much respected about you, Morgan, because whenever we worked together before I worked here, and the way that you approached your property management company that you had, and you approached working with your sales professional, it was just always very much efficiency was the key.
Yeah.
And making sure that we were the most efficient that we possibly could be. And I think that's something that is just an absolutely great quality that you have, which has then led to this amazing software to be built. And so then to really dig back in your story, because how I knew you is you own a property management company. I knew you knew a lot about real estate investing. But after we have been having conversations, just learning your entire background, it all came together as to why Rescover was able to be created. And it's really just all of the experiences that you have had. And I think that, as we've been talking about this, to me, the point that stuck out the most is that you started in real estate in 2008.
Great time.
Why?
Obviously.
Why 2008?
So let me back up a couple years prior to that. So my dad is a real estate broker and has been since the late 70s. Wow. I was born in 83. And he was a real estate broker before I was born. And he was involved in, he was very successful. It did shopping centers and worked with gas station companies. He did the first handful of Discount Tires when they came to Houston.
Wow.
A lot of really significant real estate transactions, commercial real estate. And of course the savings and loan crisis of the late 80s was real bad. I had seen real estate all of my life. We talk about it at dinner. I've known about real estate all of my life. But for some reason, maybe it was the unpredictability or some other things about it, I wasn't drawn to it.
Yep.
I had also grown up around real high-end audio systems, and I decided to open up a car audio shop. I had a retail store. I was very good at making ridiculous car stereo systems for people. I competed in sound quality competitions, had a lot of fun. But at some point, my mom was like, Morgan, you have got to stop working with your hands and start working with your head.
That's great motherly advice.
Yeah, it sure was. And, she wasn't, I don't think that she was sitting there trying to tell me like go into real estate. I think she was just like, hey, quit working with your hands.
Yeah.
Which I do enjoy. So it was 2008 and I decided, hey, you know what? I didn't do real estate back then, but let me go do this now. So I started the real estate classes. I went and talked to my dad. And I said, hey, I want to become a real estate agent for you. And he was like, well, that's a turn of events. That'd be great. Sure. Come on over. And he had a company he had run for a while at that point called Cole Commercial Realty. He had a couple of real estate agents. But as soon as I got started, maybe it wasn't real active. So I suppose it was 2008, right? Mm-hmm. Like the world was ending. But I still didn't like it. I don't like going out and leasing office space. I don't know if I'm allowed to say that, but I don't. Like, I dislike it.
Yeah.
I will represent and defend my clients until I can't anymore. Mm-hmm. I mean, I was just talking to somebody right now who was dealing with a client that we leased a big space to last year, and they had a crazy CAM reconciliation and they had a problem with it. And we pointed out the error that the landlord made. And like, I like that kind of stuff. Sure. Like I like problem solving, but I don't like walking people that are representing a company through 14 different offices that they might consider leasing and hearing all their petty reasons why they do and don't like things about it. I'm just serious. Like, I don't want to do it.
That makes a lot of sense. And when you first started out, Morgan, were you full-time? Like as soon as you jumped in.
I jumped in and went full-time. I had my car audio company turned into a home theater business, but I was kind of ready to be done doing that. And so I took the classes while I was doing my home theater thing. And then I just flipped a switch.
You're done.
And I was like, I'm done. And I went full-time on real estate.
Wow.
And here's where the fun thing happened. So that's a little bit of a long story about why I didn't like real estate. But my dad's best friend, toward the end of 2008, came to me and he said, look, Morgan, I have a friend who for 5 years has been telling me about these mobile homes they've been buying. Mm-hmm. And he said they have now got about 18 of them that they lease out, and they're making an absolute killing. Like their cash on cash return is just through the roof. He said, I have a certificate of deposit that is maturing right now, $250,000, and I have no plans for it. Would you be willing to help me buy some mobile homes and manage them?
Totally different than leasing commercial space.
And I looked at him and I said, well, Dan, I said, I got into real estate to do commercial real estate. And that's about the farthest thing from commercial real estate that you could have described. I said, but to be honest, there's nothing else going on.
Yep.
So why not? Let's give it a try. Mm-hmm. And I didn't even have an MLS login. My dad is a real estate broker, but never had a reason to become a realtor.
Right.
And wasn't a member of the Houston Association of Realtors. And so you might not know this, Kristen, but people share usernames and passwords sometimes. So I know this is crazy, but someone shared with me their HAR login information so that I could search for mobile homes that were for sale. And we found houses and we went and bought them. Real quick, bought the first one in mobile home for $24,000 in 2008, sold it 2 months ago for $115,000.
Wow.
Crazy, right? Crazy.
That is crazy.
One tenant the entire time for the 14 years or whatever, 2008 through 2022. And must have spent $15,000 doing a rehab on it when the tenant moved out.
Sure.
But I mean, the owner essentially had about $40K in this thing as a basis and sold it for what, 110, 115, something like that.
Wow.
Crazy. But anyway, so we bought 5 or 6 mobile homes initially to kind of get going. One was cheap, a couple more expensive. And then we figured out that we basically kind of set a model. And I was not an expert at like financial analysis, but the key that I said there earlier was, he said, would you help me buy them and manage them?
Yeah.
Well, I then had experience in how to operate these properties. And so months went by. We didn't go buy 5 of them in the first month, but months went by. I was managing them. I was understanding the rehab cost. I was understanding the ongoing operating expenses. And I was always good at computers and Excel and math. I did not have like a friend who had, bequeathed to me their ultimate 30-year analysis. So I just like stacked up my expenses, and I go back and look at spreadsheets I did a decade ago, and I'm like, Morgan, you were an idiot. Or back then, 2009, 2010. I'm like, what about all these other 12 expenses you forgot about? But anyway, but I figured out how to add stuff to it and take into realistic maintenance. This is the biggest thing, is realistic maintenance.
Sure.
If you don't have that, you don't have anything. And so
by realistic maintenance, do you mean like taking into account things that like capital expenditures that you'll have to have to replace, right? Like roofs have a lifetime.
That's right.
That you'll need to
not only
them.
roofs and water heaters, but also just carpet and wear items and stuff like that. And, just in my experience, mobile homes have higher ongoing maintenance than single family houses.
Sure.
As a percentage of their operating income, not necessarily the total expenses. Although some idiot or genius decided that mobile homes should have things like non-standard screen doors that should cost $600, whereas I could buy one for my home for $129.
Right.
It's just crazy. Can't tell you how many mobile homes we've actually taken out the front door and installed a pre-hung normal house door, so that we could not buy expensive mobile home doors and screen doors. Could talk about this forever. But the point is that I got boots on the ground. I got real experience. I was managing houses I was selling. I had a buyer that wanted to continue buying houses. So we evolved and we said, okay, we learned from this experience. Let's do it better. Let's do it better. His daughters then decided to buy 5 houses. One of my audio clients, I went over to his house to program a remote. He's a financial advisor. One evening, and he was like, hey, so what are you into these days? And I told him, I was like, this might interest you. I'm working with investors that are buying mobile homes as rental properties. Well, a couple of years later, I sold him 18 mobile homes and managed those. And it just became known as a person who could do this and would do this. And all of these houses I was managing, I had sold. But again, we're evolving, we're learning, we're getting better and better and better. And then what happened was a couple of years went by, and in 2010, I remember I said my dad was not a realtor.
Sure.
I needed to list some houses on the MLS. We were graduating from like mobile homes that we were going to put on Craigslist. We wanted to kind of like up our client, our tenant pool and change things. And Craigslist was not yielding good results anymore. And I needed to join HAR. And so what I was able to do was I went back then in Texas, you needed to be an agent for 2 years to become a broker. So I got my broker's license. I took the test and got my broker's license. I think I had to take a few extra classes and do whatever I had to do. It's 5 years now, and it's even harder with education. Sure. And I created the new company I created was Cole Realty and Management. And so that was different than Cole Commercial Realty.
Absolutely. So at this point, you had branched out from just being an agent underneath of your dad to now being a broker yourself, and you were still helping to purchase properties now, not just mobile home, but also single family properties as well.
Yep.
And then those that you would sell to your investors, you were managing on the back end.
That's exactly right.
Okay.
Yes, doing all that. That's exactly right. And when I went out on my own, I mean, I still had some kind of, I really went out to be a broker because my dad didn't want to join HAR and then cause agents that he sponsored to have to become realtors. You understand that deal.
Absolutely.
And so I'm sure I had some kind of a deal where he was still kind of my broker in a way. Like I was the broker, but I was paying him for the office he was providing and things like that. I was sharing commissions with him still, like, even though he wasn't actually my broker. And I still learned a lot from my dad. I mean, you wouldn't believe how valuable it is to have somebody who's got 40 plus years of experience just that knows the answer. But so then we were able to start listing houses on HAR and not sharing credentials to be searching HAR. And it was just me, though. It was just me. I was the agent and managing and stuff like that. But we also finally around 2010 or 11, I had wanted to do a mobile home park deal for a while. And it took me a little while, but we finally convinced, showed someone the value in a mobile home park. And I sold a 23 unit mobile home park.
So when you say that, do you mean that whenever you're talking about a mobile home park, it's not just the mobile homes, it's the land that's underneath of the mobile home. So you're selling, is it a plot of acreage the way that it is how you sell a mobile home park deal? Is it the acreage that is included in that and the homes? Like, is that how you value a mobile home park?
So the value is people do it different ways. We have always sought out parks that have a low number of park owned homes.
Okay.
We just want to own the dirt.
Sure.
We want to lease the dirt that's under the home.
Right.
We don't really want the maintenance and management and the potential for vacancy and such of the home itself. Generally speaking, when a mobile home enters a mobile home park, it just doesn't leave.
Right.
They cost, $5,000+ to relocate and you got connections and things. It can be very expensive. So we found a 23 space mobile home park on 10 acres. And it was in Tomball, Texas, and it had 1 or 2 park-owned homes, which is typical. It's typical that you have a couple of park-owned homes.
Sure.
And this man bought it as a 1031. He was selling his office and did a 1031 deferred tax exchange into the mobile home park. And he liked it, and he wound up a year later helped him buy 6 more.
Wow.
He told me, he goes, hey, if this goes well, then in a year, because he was displeased with how the 2008 and 9 stock market had treated him. But he had sold a business. He sold his office. He was really fortunate. He sold his office to do the 1031 for the mobile home park. But when he sold the business, he had also a significant amount of cash that he received. And rather than investing it in the market that had hurt him in 08 and 09, he invested it in real estate.
Gotcha. Which
was a lot better than selling at a discount in 08 and 09 and buying real estate. So that worked out really well for him. But yeah, so, and again, all of this was great because I continued to take my actual experience as a manager and apply it to buying these properties and say, hey, this is what we can manage this for. This is what the expenses are going to be. And when a seller sells a property, they'll give you their income and expenses, but they're not always the most realistic. Sometimes definitely at fault. They're lying, literally. Like, they had the best year ever in income. They had the lowest year ever in expenses, and they decide that NOI is what they're going to base the sales price off of. But then we come in and we're like, hey, yeah, but realistically, this is what it's going to cost to operate this thing. And anyway, so we continued doing that for a couple of years. I had been aware of the CCIM organization since my beginning in real estate. But in 2013, I decided to work real hard and earn my CCIM designation,
that is a huge designation to have. I mean, I used to work for a lady, and she said that having a CCIM was almost equivalent of like a college education. Like, it is a serious designation to hold, and there's a few. By a few, I mean, like, there's just a handful of people who have this designation.
It is. Yeah. Thank you. It is not real common. There's a good chunk of people, but it's not, the percentage of real estate professionals who have it is very small. And the nice thing about it is it's an education pathway that teaches you what you need to know about analyzing and evaluating and choosing and sizing up and location analysis and comparing real estate, but in a standardized way.
Right.
It's not, and it's a standard of an institution. It's the CCIM Institute is what it is. And anyway, they've got a very standardized way of doing the things that they do. And it's also regarded as the gold standard. And so when I'm having a conversation with somebody who's a CCIM, I know that we're both talking about net operating income the same way.
Exactly.
And they didn't accidentally forget to put real estate taxes in there. And things
Yes.
like that. And if I did want to call attention to something on their analysis that I didn't quite agree with, we could have a easy conversation about why I think it should be a different way, and they could tell me why they think it should be a different way, and then we could meet in the middle or something. But in doing that, I really kind of propelled myself into, just being a person who focuses on investments. That's all I had really done. I've never helped families buy houses, friends, yes, but that was I was very pleased with myself that I had earned that accomplishment.
Absolutely.
You have to have a qualifying portfolio. You have to have recommendations by other CCIMs. You have to take 5 classes that are like a week long, plus a couple of electives. You have to submit your portfolio. You have to be interviewed, and then take a final exam. I mean, it was a very big process. Yes. If you find someone who's a CCIM, they're not kidding around in their journey for being a professional in real estate. And after I earned that, I also started with my dad. We worked together on some things, including that we syndicate investments into mobile home and RV parks. And what that means is we find a property that's probably more expensive than one person would buy. Mm-hmm. So maybe it's a couple of $1 million. And we would go get it under contract, and then we'll get 15 people to come together, and we'll get, $25,000, $50,000, $100,000 from them for the down payment, and then get a loan. And that's called a syndication. There's other types of syndication in real estate where you like wrap up a bunch of land, but in investing, it's generally just commonly referred to as, assembling a bunch of investors together to buy one property, grouping them together. And that's been great. That's also helped me grow my management company.
Yeah.
So here after 2013, I'm probably managing 500 or 600 units.
Wow.
Between the houses, the mobile homes, the individual mobile homes, the mobile home lots, all that kind of stuff.
And so this evolution of what you've done so far in this story throughout your career of, getting your real estate license, not really loving the commercial, going into mobile home parks, which is not, to me, that's not common. Like that is not something that people commonly do. You found something that made you excited. Then you got your CCIM, and now you're doing syndications. Were you just following things that you found interesting and decided, hey, I'm going to learn how to do that and do it? Like, did opportunities just come to you? Like, these are things that I think that not normal, but average real estate professionals just don't pursue. So
sure.
How did you?
That's a good question.
How did you get there?
In the area where we live, there's people that are, investors in things. And so buyers and investors are maybe at least as commonplace here as they are other places. I know that the thing that inspired me to do the syndication was after I was a CCIM, but I had worked with the client. His name was Mike, that had bought the several mobile home parks. The most expensive one that he bought was about $1.6 million, which was awesome. Like I loved doing that deal, right? Who doesn't want to do that? But he was the only person that I had ever sold a property that was that large to. But I am now knowing where to search for mobile home parks. I'm receiving email blasts about mobile home parks that are for sale, and they are $1 million and $2 million and $4 million and $5 million. And I'm like, okay, well, Mike's not buying anything right now, and I don't know anybody else that's going to buy something that big. Well, through the CCIM organization, I got a mail blast. There was a guy named Gene Trowbridge, who was like the godfather of real estate syndication. Mm-hmm. He syndicated about 70 self-storage deals.
Wow.
Then he retired, went to law school, became an attorney, and opened a law firm to help real estate professionals create what's called a PPM, which is a private placement memorandum, which is the small phone book you have to write. For listeners, there used to be this book that they printed with a list of names and phone numbers, and it's called a phone book.
Wow.
Yeah.
I think the pages were like yellow or something.
The pages were yellow or white. But anyway, so Gene helped people write PPMs, and you have to do that when you syndicate real estate. And he had a class he was doing about syndication. Mm-hmm. And I got an email blast I had seen him on YouTube, and then I got an email blast, and I went up to Chicago, and my dad went with me to go to his class. There's like the real estate mothership up there. It's the real estate building in Chicago, but it's also got the CCIM organization, IREM, which is the Institute for Real Estate Management, is there. I think NAR is there also. Wow. It may be the NAR building. Anyway, it is like real estate mecca, And anyway, I went there for his class, And I feel like what had happened was I was seeing these emails from him. I knew that he was syndicating, and I knew that that's how you buy an expensive property, because you get multiple buyers or multiple investors. I knew that I was seeing properties that were worth buying.
Yeah.
They were coming across my email. I'm like, this is worth buying. I just don't personally know a person who's going to buy a $2 million mobile home park at that point. And so off we went. And my dad and I have done that together, and I've really enjoyed it. He's a broker. I'm a broker. We do broker. Well, he doesn't really do that anymore, but separately we were brokers.
Right.
But together we would get the properties under contract, raise the money, and we speak as the ownership, but then I have the management company that does the day-to-day management. And so you said, do you see something you like and you just go for it? I mean, that is pretty much what happened. Like I continued to see deals that I wanted to do. It wasn't that I was working for a specific client. I just was thinking to myself, man, I think someone should buy this and I want to make this happen.
Yeah.
And so we syndicated a handful of deals, and things started to just move along. And again, having a management company and having that historical operating data is invaluable when you're evaluating an opportunity.
Absolutely. And so now at this time, you're still under the Cole Realty and Management umbrella, but you made a shift and you shifted over to be Brightline Property Management. When did that shift happen?
So we did that in 2019, So I'm trying to think back if there was anything else significant in there from when I became a CCIM. I mean, I did some nice real estate transactions that furthered me along, but what happened was, I do know what was significant. In 2018, I was still working with buyers to buy houses. I mean, I'm doing both. I'm managing some houses. I'm managing mobile home parks. But I thought to myself, we can make this house buying process more efficient. At that point, I was a CCIM. CCIM gives you these amazing spreadsheets and stuff that you can do these really cool analysis on. And I said, okay, I'm using my CCIM spreadsheets. I've got some that are like modified and stuff to do certain things. And when I see a house that's available for sale on the MLS, I plug all the data in. But if it doesn't work out, I'm like, okay, well, let's go to the next one. And if that doesn't work out, I go to the next one. But I get fatigued. Like, I don't want to sit there in front of my computer continuously.
Right.
And so I was talking to a friend. He was redoing my website or something. And I mentioned to him I wanted to have like a calculator on there. And he hooked me up with his friend who was a developer. And I just worked with him to create the method that I knew how to analyze houses the right way. We interfaced with the HAR MLS, Houston Association of Realtors. And it was a WordPress plugin on my Cole Realty website that we could log in and we could search for houses and see a financial analysis. And then I thought to myself, okay, this is pretty neat. I was using it. And how about if we now start pushing harder on managing single family houses?
Right. Because now at this point, you're bringing over the methodology and the way that you would analyze these huge deals and analyze commercial real estate. And you're bringing that over to the single family space, which typically we are not looking at analysis of that in depth of the process. No,
that's exactly right. It's generally just how much will it rent for? How much is it? Somebody maybe do the gross rent multiplier or something like that, and off they go. Which that's the most worthless metric. I could talk about that for 3 hours. But and at the same time that I thought, hey, I want to grow the single family. I know that I was really interested in growing my management business and actually going after third party. So that was a thing that I've learned is unique. I didn't know that most people in management were not selling the properties they were managing.
Yes.
I did that. And so I thought that was the natural path. But when I realized that I thought to myself, okay, like I want to go after, small apartment communities. I want to manage some other mobile home parks that I don't own. I also pursued my CPM designation, which is Certified Property Manager. And I got that in 2018, and right ahead of deciding to then launch Brightline Property Management. And I don't remember exactly when we hired Rent Scale and met you, Kristen, but it was in 2019 or 2020. It was probably in 2020.
It was in 2020.
Yeah, that makes sense. I don't really like to think about 2020.
Me neither. Did that year even happen?
I deleted it. but we launched Brightline and we were using Rentlyzer. So the WordPress plugin, we decided to name it, and we named it Rentlyzer.
Yes.
And there is another company, now we're called Riscover, and we learned there's another company that has a product that's a lot like, the name is like Rentlyzer. It's not Rentlyzer. But it is a real estate calculator, but it is not what we're talking about here. But we would do some co-branded marketing events where, so for marketing, we would think, hey, look, we're a management company. I of course want to sell my clients' houses, but I also want to grow my management company. So let me help other realtors buy houses.
Yep.
Let me help them by giving them access to Rentlyzer. They can log in, they can find houses, they can sell them to their clients, and then we'll manage them.
Yep.
And we were okay with that because we just wanted to build a management company. And so we started having these co-branded events. We were a member of this gun range, and we'd go rent a full auto MP5 and have full auto Friday and stuff like that out there. It was a lot of fun. I'd love to do that again. But we would do that, and it started to grow, and people started to enjoy Rentlyzer. And it's complicated. The software is wildly complicated. I mean, you know that now. And it was not without its problems, and things would break, and then we'd have to fix them. And so finally in 2020, I went to an old friend of mine that I'd known since I was like 15, John, who works here. He's our CTO.
Yeah.
And got him involved. And he overhauled a lot of stuff, and he enabled us to then start to take on much more complex features.
Yes.
And really in 2020, when the world was also ending then, so I don't even remember what happened in 2020, but I know that we accomplished enough development wise that in 2021, toward the end of 2021, I was observing the success of Rentlyzer. I was seeing the power of it. I was seeing it, using it to grow my management company. My management company, Brightline, was growing.
Yes.
Because we were finding leads on Rentlyzer. We were finding houses on Rentlyzer. We were becoming known as like the investment-oriented management company. People knew about us. And it's also what made me decide to stop being a residential manager.
Yep.
And it was just because of this. I saw it. I was like, everybody would say to me like, back in 2018, when I first built when we had the website plugin, they're like, Morgan, this is bigger than your company. You need to make this a separate thing so more people can use it. And then they're like, this is bigger than Houston. You need to make it bigger. And we went to Texas. Hey, this is bigger than Texas. You need to make, anyway. So I saw like, hey, this works for my company. I don't really want to do this anymore because I'm having more fun with Rentlyzer.
Yeah.
And so I decided to sell my management contracts to another local management company and just go full speed on Rentlyzer.
Yep.
And in 2022, so I sold it at the end of 2021. In 2022, we went to a couple of trade shows. We continued to invest in growing our footprint, developing more features, making some important relationships in the industry. And then at the end of 2022, we figured out that things were really starting to cook with Rentlyzer.
Yes.
Put some more capital into it, took on another partner, and hired you and hired Ben and rebranded to Riscover. And we're hiring a couple more developers right now, and we are just growing as much as we possibly can.
Yes. And I remember the first time that you showed me Rentlyzer.
Yeah.
And I remember hopping off of that call and just kind of sitting there and being like, what did I just see? Like the things that we can do on now Riscover,
yeah,
are things that I never would have thought would have been possible. And that I think it all came together based on what you've done. Like your every step in what you've done in your career has been a building block to being able to develop this software. And I think this software is most impactful because it's bringing a sophistication to parts of the real estate industry that it hasn't existed in before.
I like the way you said that.
As single family investors are coming in and they're seeing the power of investing in real estate.
Oh, yeah.
They're wanting to know how their properties are going to perform. And it's not the same as commercial real estate.
No.
It's not the same even as mobile home parks. It's completely different. And so to be able to have a calculator like this, and other calculators exist, we know that.
Sure they do.
None of them are as sophisticated as what we have with Discover. So the way that you're able to analyze properties, and the way that you're able to source absentee owners, the way that you're able to source and aggregate data, it's in a way that I haven't seen before. And that to me is what makes it so exciting, and as something that people have the ability to latch on to, because it's things that we in the real estate industry have dreamed about, but never even knew that it was possible. But you did. You knew that there was a way to do it.
You know, I've always loved technology. I had a Commodore 128 in my bedroom when I was in third grade. And I'm not a developer. I could make the thing talk. That was actually pretty neat. I learned how to program how to make it talk. I think it was called Easy Speech 64. Someone who's a Commodore person, correct me. But you know, I've just always loved technology, and I like math. Like, I like the problem solving nature of math. And when I was able to go to a project-based real estate career, I guess I could call it, that's the only way I could describe it, instead of just transactional, where it's like someone wants to buy a house, okay, we buy a house, we bought the house. I mean, I like it when it's a bigger project and it's a problem-solving thing. How can we make this better? How can we make this work? How can we make this more profitable, more valuable? I'm attracted to projects. And so when I saw the project in let's make the process more efficient, I mean, you know, I want to make it more efficient. So I said, I love technology. I'm really loving real estate investing. Let's make that more efficient. And you know, so we built the software, and it's been really rewarding to see people use what we created and say, gosh, you know, I also had an Excel spreadsheet, but yours is so much more powerful. And why would I ever use my Excel spreadsheet? And you know, I'm not saying that. I mean, look, if you're accurately calculating a cap rate, then great. You are accurately calculating a cap rate. There's not two ways to do that. There's only one. So ours is not a better cap rate.
Correct.
A cap rate's cap rate. But we're also showing people that they should be thinking of additional metrics, and they should be thinking further down the road, and they should be doing our 30-year forward-looking analysis. And it's making that attainable for people who definitely can understand like what the numbers are telling them, but they're not the people that are going to build the spreadsheet. They're not the people that are going to build the software. And then with the efficiency side, where you just type in an address and usually it knows all the answers. It might pop up and say, hey, we don't know everything about this house. Tell me something about it. But it'll do the analysis for you. With the leads, you know, it was Amy, who was our BDM at Brightline, who is just a world-class stalker. And she can find anybody online. But she came to me and we kind of brainstormed about it. But she was like, look, she's like, I can find these people on the tax rolls, but I cannot figure out if they own multiple properties. And so we said to ourselves, well, man, we have an enormous property database in what we're using in Rentlizer at the time, Discover now. How about we start doing some like reverse searching, and we started grouping people together by how many properties they own and stuff like that. And that was where we found the success in Brightline. Was our outbound mail campaign was a 6-part mail, and you worked on that with us.
Yes.
And after about letter 3 or 4, the phone rings. Hey, I've been getting y'all's letters for the past couple of months. And you know, I've been meaning to talk to you, but man, I just had the worst night ever with one of my properties, and I'm ready to hand off the management of my 8 doors to a management company. And so, you know, for us to show that we're professional and that we're investment oriented by including some Rentlizer reports in our marketing material, and to use the software to identify those investors, it was just awesome. It was awesome.
Absolutely. So I think that with everything that you have done in your career, Morgan, is then leading us to this podcast that we're doing right now. And so on the real estate crash course, yes, Discover will be brought up because it is this beautiful creation that you have made. But give us an overview of what we're going to be covering on the Real Estate Crash Course, because it's so much more than just Riskover.
This is not a Riskover sales pitch continuously. I like talking to people and doing my part to educate them in their real estate journey.
Yes.
I have now at this point done a significant amount of real estate transactions. You know, in 2016, I worked with my best friend to he sold his assisted living facility through a company that sells them, but we took the proceeds of that and bought $35 million worth of commercial real estate.
Wow.
The air gets pretty thin when you talk to people that do full size transactions like that. And I want to take that same, I mean, we had lenders that were complimenting us on the unique quality of our analysis and the work that we did in buying those properties compared to what they usually see. I know that I'm good at this. I can say that. Like, I know that I'm good at this. And I like sharing that with people. And I don't care if it's a $24,000 mobile home or a $13 million shopping center. I want to talk to you about cap rate and cash on cash. So what are you going to learn here? You're going to learn cap rate and cash on cash and IRR and why it matters and how to evaluate the houses you already own and calculate their cash on cash, how to calculate their internal rate of return. You're going to learn to kind of size up why would an investment be a good investment compared to another investment.
Yep.
Anybody that owns a few houses, one of them you pretty much definitely like more than the rest of them.
Yep.
But you might not be able to tell me why. Okay, well, what if we figured out how to analyze the cash flow of those houses? And the answer was that most of your houses generate a 3% cash on cash, but one of them generates an 8% cash on cash.
Yep.
The thing that resonates with you is that you like houses that have high cash flow. We might find a person who's like an engineer or a doctor who has a high W-2 income, no time to manage, and maybe they don't care so much about cash flow because they have high income, but they want a lot of appreciation. And maybe they could tell us that, or we could help them figure that out by listening to our courses here.
Yep.
And they could say, yeah, you know what, man, as long as that thing breaks even and I don't have to feed it, I'm happy, but I'd rather buy in an area that's probably going to have a lot of appreciation.
Absolutely.
So we're going to talk about how to find property, how to analyze property, how to buy property, how to choose a property manager.
Yes.
Because you need a manager. You might self-manage. Fine. That's great if you want to do that. But whether you need to understand all the things you're going to be doing and how to be competitive when you're, attracting tenants and being able to say to them, I offer competitive things compared to managers that are offering a full suite of services to those same tenants. We're going to talk about how to purchase a property, finance options, how to purchase multiple properties, how to refinance them.
Yes.
Cash out refinances.
Yes.
When to figure out if you're earning a suboptimal return on equity compared to what you could be earning. And should you do a cash out refinance or should you just sell it?
Yep.
I bought 7 investment houses in 2016. I sold 7 investment houses in the last 18 months.
Wow.
Because it was time to take profit. I observed the disconnect between rental rates and property values. And I said, man, this isn't an investment if I don't take profit.
Right.
And so I could buy more. I can buy them again. They'll be less expensive soon.
Yep.
But, I want to talk about that. Sometimes you just got to make a decision, make an informed decision and act on it.
Yes.
And I want to arm people with the ability to make an informed decision.
Yes, absolutely. And I think that to me is what is going to be so special about this is that it is an opportunity for the everyday person to understand all of these things that happen in real estate, because real estate investing is, in my opinion, the best way for someone to achieve the American dream, the ability to have legacy income that they can pass down to their children and that they can build something for themselves outside of just going to work every single day and trading your time for money. And I feel that real estate investing is the way to financial freedom. And we will provide some of that education on how to get there, like how you can go from 0 to 100 really quick. And so that's what I think is going to be really awesome about the Real Estate Crash Course.
And that, we're going to take experience. We're going to take, I've been doing this since 2008. I've been talking about it since I was born. You were saying it's the American dream. And I think you rightly described that to me. I have said, this is a saying that I have. I think everyone should own a house. not necessarily the one they live in.
Yep.
The American dream is usually stated as, owning a house with a white picket fence and having 1.7 children and all that. But I think owning real estate is a pathway to wealth accumulation.
Yes.
But you might be better off renting an apartment nearby where you work and owning some real estate that is an investment.
Yep.
I did a presentation once that absolutely fell on deaf ears, but it was why buy when you can rent.
Mm-hmm.
And I could stand by that in many markets and in many years. You could always prove me wrong and I can always prove you wrong, but there is a set of circumstances where you would absolutely lose your shirt if you bought a house and then sold it.
Yep.
And if you rent, you might not be taking advantage of certain things. But anyway, that's the kind of stuff we're going to talk about on here. We're going to take my life experiences, my expertise in investment real estate, and we're going to make it, we're going to boil it down. And I'd also love to do some Q&A.
Yeah.
We can have people submit their properties that they're interested in analyzing or talking about.
Yep.
Bring somebody in on Zoom or whatever. And let's work together and share some knowledge.
Absolutely.